Last year, every tax calculator told us the same thing. Claim the HRA deduction in Arpit's name. But following that advice would have cost us 1.32 lakh extra in taxes. Not because our calculation was wrong, but because we were asking the wrong question.
Like most salaried couples, we were trying to optimize our taxes individually. Which regime is best for her? Which regime is best for me? What we eventually realized is that we were asking the wrong questions. Instead, the correct question to ask is, what is the best tax outcome for the household?
And that one shift in thinking reduced our tax bill by 1.32 lakh last year. In this video, we'll show you exactly what happened last year, why the answer has flipped again this year, and how any salaried couple can figure out the right tax regime combination. Let me tell you exactly what happened. So last year we paid 9 lakh rupees in rent. Every calculator suggested that Arpit should claim the HRA exemption because his salary structure generated larger tax deduction.
But when we looked at our taxes together, the answer changed. Before deductions, Rashi's taxable income was just above 50 lakh rupees. Mine was already well above that level. If I claimed HRA exemption, then I got a higher tax deduction. But Rashi's income was still above 50 lakh rupees, which meant surcharge continued to apply.
When we shifted the HRA claim to me, the exemption itself was smaller, but my total taxable income went well below 50 lakh and hence the surcharge disappeared.
And that single change reduced our combined household tax by 1.32 lakhs.
Nothing else changed. Not the rent, not the salaries, just who claimed the deduction. That's the moment we realized that things as simple as tax regime selection as well should be done at a household level and not at an individual level.
Once we understood that, we asked ourselves something interesting. How many scenarios are possible here? For a salaried couple, there are 4 options. Both under the new regime, both under the old regime, husband on old, wife on new, and vice versa.
And here's where things get tricky. The combination that minimizes your tax at an household level may not be the combination that minimizes your taxes individually. And that is because salary structures, surcharge thresholds, and deductions all interact with each other.
In fact, the answer can change every year. A salary hike can change it, a bonus can change it, or even a job switch can change it. That's what exactly happened to us. Last year, one combination was the best. This year, the answer changed. So, how did we figure out the right answer? We started by collecting both the salary structures, not just the CTC. The complete breakup, basic pay, HRA, NPS, variable pay, everything. Then, we listed every deduction available at the household. HRA, NPS, ATC, home loan benefits, health insurance, everything put down there. Then we tested different scenarios, all 4 regime combinations, different HRA allocations, different deduction allocations. And for every scenario, we asked just one question: what's the total household tax bill? The problem was that doing this manually takes time, and every time something changes, we have to rerun the exercise. So we built a calculator that does it automatically.
The calculator solves the exact problem that we were struggling with. Which tax regime combination minimizes the household tax bill? You first enter salary structures, your deductions. The calculator will also ask for your rent details and other such inputs to understand what all deductions you can claim. The calculator then evaluates all possible tax combinations automatically, including the right split combination for deductions like HRA. This is the screen that matters. Many people discover that the answer they assumed was right wasn't the optimal one. And even if it is, they finally know they are making the best possible choice by running it with actual numbers. The calculator link is in the description. Do check it out, and if you need any help, reach out to us on our email ID given in the description. If there's one thing we want you to take from this exercise, is that Tax regime selection is not an individual exercise for salaried couples. It's a household decision.
The difference between the obvious answer and the optimal answer can be surprisingly large. In our case, that was 1.32 lakh rupees. So before you choose the regime, always run the numbers. You may be leaving money on the table without even realizing it.
If you found this useful, please subscribe to our channel for tax planning and financial planning content.
We'll see you in the next one.